Thomas, thanks very much for joining us here at your offices in Frankfurt. It would be good to get a sense, I suppose, of what you're seeing at the moment in terms of the market going forward.
Yeah, thanks, Richard, and also welcome to our office here in Frankfurt. Yeah, well, the market, as we know, it's pretty in a challenging phase currently. We see that on the investor side, we still have a lot of dry powder, which is good. New capital is currently difficult to get and to raise, but the dry powder is still there, and the interest and the allocation to real estate is still there. But of course, all the investors want to invest at the right price point. And currently, it's uncertain. Of course, prices are down yet. The valuations in Germany and in Europe are more or less reduced, I would say 10%. But if you look at real deals that are ongoing, there are much higher discounts currently. We see 20%, 30%, up to 50%, depending on strategy of the asset and location, of course. And the other driver is, of course, the financing side, as we see that banks are slightly reluctant. They're still open in Germany, at least. I hear from other countries like the UK or US, it's more difficult or even more expensive, but it's possible, but of course on a lower LTV level, as we have seen, and that's an important driver, of course. And if you finance it as another interest rate level, but that's something that's reflecting more or less the price. Fundamentally, I see. I'm a deals person. I'm always positive on transactions, but we will need some time to balance it out. Where will be the sustainable interest level for the loan side? On the other side, what do we see on the rental development? Currently, we have a stabilization or stabilizing factor in the market, which is non-existing development. So there's no new stock coming to the market, and the underlying general fundamental economy is still stable. It's not growing, but it's still stable. So we don't see any restructuring. And then you have to look at the different types of use. Office is still a challenge with the home office discussion, which is going on, but we don't see significant increase in vacancy rates, for example, here in Germany in the core markets. The residential markets are still stable, as in the urban areas. The pressure to move into the urban areas is still there and will remain. We see a bit of light in retail, which was always bashed over the last years. Prices and valuations come down. Now people want to shop again in the shops, so online sales are going down currently, and on-site sales are going up. So that's the momentum. I think the year 2023 will still be pretty on a low level, but we will see transactions, and here and there also some restructurings coming up.
Thomas, looking at ESG, transformation in the market, particularly as well that piece around digitization, new technology coming through. What's your take on that, and where do you see us going ahead in terms of the market?
The ESG transformation, of course, there is a big of regulatory and tax environment, but one of the core topics is about data. Yeah, we need the data on the asset level. How do we aggregate this up to portfolio level, up to corporate level, and up to the different needs from the different stakeholders? Where if the banking is asking for, the banks are asking for different data than the insurers, than other stakeholders. So that's important, and that's something where we are moving in the right direction. We are creating this Tech for Impact map for 3 years now, and we are present a new one where we focus on startups globally that have a specific ESG real estate focus, and we are always picking up the top 100 we are seeing. And there's a differentiated market, as we have some bumpy times after the insolvency of the US bank on venture capital especially. So startups in the early stage are a bit struggling now finding capital for their new startups. But the existing, let's say, growth phase startups that really bring a value and bring the right data on the table to the owners of the asset, they are growing fast because we need the data, and the ESG transformation is moving further ahead. And of course, the last years were more or less focused on energy efficiency, CO2 reduction. Now we are focusing more on embodied carbon, circularity. Biodiversity is a new topic that's coming up. So these are the topics where data are needed, and we need these innovators and we need the startups. So I think all this, even if we are currently in a difficult phase for some of the startups, I think they will have a bright future, most of them.
Great, really interesting to catch up. Thanks, Thomas.
Thank you, Richard.